after that, our next topic up here is that China's cracking down on domestic firms being listed in the United States. And what does that mean? China wants to China doesn't want so many companies listing themselves on the United States exchanges, and they want to kind of rein in because they want to keep tech companies and all that data as part of like state-owned assets. So companies like Didi, Alibaba, and Tencent are under immense pressure to perform, and are immense pressure by the government in regulatory actions and investigations. And the State Council said in a statement Tuesday that the rules of the overseas listing system for domestic enterprises will be updated, while it will also tighten restrictions on cross-border data flows and security. So what does that mean? National security. The same thing that we've been seeing, right? This isn't anything new. We've been hearing this out of China now for ramped up for the last couple of months. But the problem is that we're seeing here is that China can move very quickly. So if China decides to update policies and laws, they can update policies and laws very quickly, which could change the way dynamics in the market and could affect prices. As at this time, we have about 250 at least Chinese companies listed in the United States. That makes up a $2 trillion market, including 8 state-owned companies, Chinese state-owned companies. And a lot of investors put a lot of money into the ADRs, right? And these are the American Depository Receipts, which allow U.S. investors to actually invest in other companies in foreign countries without having to actually buy stocks there. The banks and brokers own the shares, and they issue ADR securities backed by those shares. So they can allow the markets to have liquidity here while having to not have every single investor have to go through the complicated process. So they worry that that market could start to dry up and there could be some hits there. And the Invesco Golden Dragon China ETF, ticker PGJ, lost about a third of its value since February. So that just shows that you're seeing a reaction in the markets to this and fears about future IPOs and current companies that are listed. So the Nasdaq listed company Weibo may take itself private after its operator parent Tencent came under investigation. And Didi is down 20% and is not allowed to accept any new user registrations until a Chinese cybersecurity investigation has concluded. So there's still about 60 Chinese IPOs listed to go down in the United States. And that was at the end of April. So, it's not like there's a big shutdown happening, but the thing to look about here is as these laws develop, we might start seeing funds and investment entities start to kind of move away from these things. You might see ETFs taking hit. You might see individual companies taking hits, depending on how fast China moves with this. So something to pay attention to, especially if you have exposure to Chinese companies or funds or ETFs that track and trade these assets.
So yeah. which stocks would we worry about? Or
like I said, so Didi, Alibaba, and Tencent are 3 big examples. Some of the most widely known. Weibo is a company I traded for a little while. They might go private as a result of this. So you just really have to look at all of them, but mostly tech companies, because China's mostly afraid of tech companies. So it really isn't any other sector. It's mostly technology, because China views its data as its sovereign national, like a state asset. So, if they're on other country soils and they're somehow sharing data or data is being passed along and they're getting to see into those operations, that makes China very uncomfortable. So they want to crack down on that. And the IPO of Didi, by the way, China said, don't do it. Don't do this yet until we investigate you. And they went ahead and did it anyway because they had pressure from their investors. They said, we give you a lot of money. You better IPO, we want the return. And then now they're under investigation from China, down 20%, and they're not allowed to take any new users, so no new registrations. So China said no. Chinese government said you're not allowed to do that until we're done with the investigation.
Grounded.
So, yeah, exactly.
I know there's a lot of investors out there that are very wary about being in investments that have to do with the majority of the shareholders being in China. So that's where it's going to be another factor in if you start investing in these Chinese companies, because
mostly
you don't
Chinese
know
tech.
what happens. Yeah, Chinese tech, definitely.
Mostly Chinese tech. So just be aware of that in the markets, because again, China can move very quickly because they don't have to go through as many regulatory hurdles. So if they want to make laws and tighten these laws, they can just go ahead and do it. Within the next couple of weeks to a month or two, we could see major changes that could have material effects.
I mean, we saw the hedge fund that lost billions of dollars, Archego's fund. They lost billions of dollars on betting on these tech companies in China. They were well over leveraged and they got wiped out. They're now a case of what not to do.
Right, exactly. So China's government has a lot of power and a lot of reach, and they can make real effects happen. They can force real changes to occur. So when you're in the market, you're investing in these assets, just to be aware of that.